Our industry is moving faster than ever. Where are freight volumes headed? How will this affect capacity? And of course, what's the newest technology that can benefit your business? Those questions and many more will be answered at the industry's hottest freight tech conference this November in Chicago. Come join us at FreightWaves Live November 12th and 13th at the McCormick Center. Visit FreightWavesLive.com to register.
Welcome to your Thursday edition of the Carrier Update, sponsored by Powerfleet. My name is Kyle Cunningham. Let's talk about what's happening in regards to outbound tender rejects all across the country. Big moves up from under 5% to 5.18. Now here's the interesting thing. The national volumes are still staying under 10,000, this white line here, rolling flat across with the outbound rejects up. What's the reasoning? Let's take a look. Big green moves, big red moves. But as we see, a lot of different volatile moves, 92% in Los Angeles. We'll talk about that one in just a second. In the bigger markets, actually a little bit of a turn down. But let's look and see in regards to the biggest movers as of yesterday. Quincy, Illinois, we talked about that one quite a bit, 36% up, 16.6 in regards to outbound rejections. Big, huge moves all across, from tiny numbers under 5% up a little bit, but that indicates that you are going to have more strength on your assets today. Let's take a look at what's happening in Los Angeles. From under 2.5% to 4.4%, huge vertical spike up. Now these vertical spike ups indicate that there could be a lot of things going on in Los Angeles. Total lack of capacity or freight that just has to move right away. So be sure that you take a look and see what's going on in LA and understand that with the outbound volumes trending down a little bit and the inbound volumes trending down a little bit as well, this rejection number is going to most likely stay elevated for a little bit, but if I had to guess, it's probably going to come right back down to around 2.5%. Biggest freight market in the country, can't argue with that, but where it's at now, make sure you get what you deserve. Take it out northwest, Spokane, Washington. Wait time down a little bit, 133 minutes. That looks good. But let's take a look in regards to rejections. Blue Mountain here up 101%. Seems like a huge number up. Basically just returning kind of back to that moving average line, 8.5%. Outbound volume spiking up, most likely contributing to that. Inbound staying flat. As always, make sure you stay tuned to your carrier update. I'll see you tomorrow. Joined now by Seth Holm with our finance update, talking about what's happening in regards to Class 8 truck orders. Please tell me more about what's going on with this.
Thanks, Kyle. So a couple days ago, we got the September numbers from ACT Research on the Class 8 net truck orders. So in September, that number came in down here in the yellow line on my chart here at 12,700 or thereabouts. And that is down 70% year on year. So as you can see here, all year we've been running below the white line, which is the replacement demand estimate that we have. We estimate this at about 23,000 a month. And so they were down 70% year over year. In September, they've been down between 70 and 80% all year long. Now, looking at this chart, a couple main takeaways here. So, like I said, we've been running below replacement demand all year long. And then if you look up here in the green line up top, that's 2018. So in 2018, it's kind of a tale of two halves. In the first half, we had really booming orders up here. We broke an all-time record. We were doing over 50,000 new orders a month here. And then as the market cooled, it really kind of tailed off here in the back half of the year. Same thing in 2017, which is the lighter blue line. As you can see, when the market originally took off in the last cycle, those really spiked up there and ran from there. So overall, though, when you annualize this month's number of 12,700, you kind of get to about 160,000 trucks. Now, our estimate of replacement demand is 275,000. So that shortfall is basically about 5% relative to capacity. So that is a bullish indicator from a supply and demand perspective looking into 2020.
Now we've got 2 months essentially left in the rest of the year. Where does it go? Does it stay underneath the replacement line, or do you see a end-of-year spike coming?
Yeah, I would expect it to stay depressed. I mean, it's been really consistent here, basically flatlining all year long. Although, as you can see, the comparisons do start to get easier here as they really fell off there in the back half of the year.
Excellent. Thanks so much for the update. As it goes, you see the trucks, they've got to be replaced somehow. Thanks for watching FreightWaves Now today. We will see you again tomorrow. If you're watching on YouTube, hit that like and subscribe button, and be sure to follow us on all our social media channels, whether that's Facebook, LinkedIn, or Twitter. Take care.